Hello friends, let me decode the budget for you, especially from a market point of view, because the market has seen a sharp sell-off post the budget. I think this was largely because expectations were sky high. There were lots of expectations around revival of growth, a lot of measures to try and support growth. People expected a complete overhaul of personal income tax slabs, just like they'd seen it happening for corporate tax a few months back. And I think to a large extent on those fronts, they were disappointed. We, however, were very clear that in a year when the government has not seen any growth in their tax revenue, it will be very, very difficult to meet expectations on all these fronts. So we were only factoring in a marginal shift or a marginal relief to taxpayers on the personal income tax front. I think what was a bit of a surprise was that about 70 exemptions have been taken off the table, because we were expecting a slight increase in Section 80C benefit. But besides that, I think one has to keep in mind that the Modi government does use not only the budget platform, but even outside of it, they make a lot of announcements as and when required. So I do believe that if the government sees a ramp up in its revenue collection, then going forward in the coming months, there may be more measures that are announced to support economic growth. And therefore, I'm still quite sanguine on the markets. I'm sanguine for three reasons. One is that the earnings yield of equity is still quite attractive. The second reason is that I do believe that the government will continue with its reform measures in the months to come, like I said, especially if they see traction on the revenue front. The third is that globally also we believe that there is a risk on rally, and we do see FI money coming in India in the months to come. And from a budget point of view, when I look at the budget math per se, not the speech, but only the math from whatever numbers that we've seen so far, I think on the revenue front, it seems like the government will have to or kind of meet its numbers in FY21. And that is because, especially with the amnesty scheme coming through for direct tax cases which are pending or which are under dispute, I think the government can raise enough resources on the tax side. And I think the monitorable, of course, is on the GST front, but I think that can be taken care of on the direct tax side and the indirect tax side. Similarly, on disinvestment, with the LIC IPO on the cards, I think that too will give the government more resources in its hands to spend. And on the expenditure side, the government has targeted 13% for next year, which is similar to what we had projected. And therefore, I think that with that kind of expenditure targeting and with more measures possibly in months to come, once the market makes the adjustment after today and maybe a little more during the course of next week, I think we will again start focusing on bottom-up stories. We'll start focusing on results and all the other measures that will come through. Thank you.